there's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. A, everybody was massively underweight. And B, suddenly the entire world is building on top of ETH rails, which is what I said would happen. Is like the financial industry is, they'll choose Microsoft over Apple every time because that's what they do. You don't get fired for building on ETH. So Robinhood, could they have chosen Solana to build on? Yeah, but they chose an ETH layer too. Kind of because that's what, as you and I know, go into any single investment bank or hedge fund on earth, it's all Microsoft.
Raoul Pal's tackling has the banana zone thesis been right, unpacking markets, big moves, and future plays. Stick around to find out.
Yeah, I do. I've said this for a long time. I mean, as you know, my main bet has been Sui for a while, and before that was Solana. Those rotations have done well. Sui still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token when really there's one simple thing is go on to CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10. Our general view, using our macro work, is the dollar probably still goes lower, that we've got another leg to go. And that's the leg that would confirm a pushing into, let's say, Q2 versus Q1 of 2026. Also, listen to what Scott Bessent, Trump, and everybody says. They basically want a weaker dollar. And so everybody in the world wants a weaker dollar because it helps the business cycle. It helps everybody. People need access to dollars. So I still think we've got another leg lower before dollar strength starts kicking in. Normally, when the economy is strong, the dollar is weaker. It's when things turn again that you tend to get the dollar strengthening. So no, I'm still biased towards weakness.
A major shift has just hit the crypto market as Bitcoin dominance, BTC.D, broke below a 2-year trend line, sparking confirmation of alt season 2025. The drop in dominance signals that capital is rotating out of Bitcoin and into altcoins, fueling a fresh wave of rallies across the market. Analysts have been anticipating this moment, and now the charts are delivering the proof. Bitcoin's dominance slid from 66% to 60% in under 2 months, and the impact is already clear. Ethereum has stolen the spotlight, rebounding from $3,354 to a local high of $4,206, a more than 20% surge in just 1 week. Breaking back above the crucial $4,000 psychological level has reignited bullish optimism for ETH holders, with many expecting more upside ahead. Other major altcoins are following suit. XRP dumped above the $3 mark after Ripple and the SEC filed for dismissal in their long-running case, turning resistance into fresh support. Cardano climbed 15% to reclaim the 0.80 level, a historically important price zone. Meanwhile, Solana pushed past $180, holding firm above the resistance. With the total altcoin market cap rising 13% this week, momentum is building fast. If trends continue, this alt season could reshape the crypto landscape for the rest of 2025.
Look, I've never had an issue with ETH, and yes, it underperforms over periods in time, but it was like, this is the core foundation stone of Web3 is ETH, and everything else kind of builds around it, Bitcoin being a separate beast. So what I had done is, we've talked about this before, the second cycle trade where somebody's got Lindy effect and you buy it, which was Solana at the low in 22, is usually the best trade of all because it's kind of been de-risked. And then people have the light bulb moment, which they're having again with ETH, right? But ETH has gone through the Lindy effect in the past. This was happening to NFTs, and I talked about this for a while. Nobody understood what the fuck I was talking about. And I'm like, this stuff is survived the Lindy effects. There's a group of collectors who passionately care about Xcopy, Beeple, whoever it may be, Sam Spratt, all of this stuff. And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage. But in those houses, they have 10 times the value of the house in art itself. Right, so it has always been a proven store of value. And so what we're seeing is, as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And I'm going to show you a chart on this because I put it on X yesterday. Let's have a look.
Harvard's endowment has made a bold move in the second quarter of 2025, pouring hundreds of millions into Bitcoin and gold. The Harvard Management Company purchased 1.9 million shares of the iShares Bitcoin Trust, worth $116.7 million, alongside 333,000 shares of the SPDR Gold Trust, valued at $101.5 million. This marks a sharp pivot from last quarter when the endowment cut back heavily on big tech holdings. The timing is striking. Gold prices hit record highs above $3,400 an ounce in April as inflation fears and market volatility drove demand for safe haven assets. Bitcoin, after dipping to $75,000 earlier this year, soared to an all-time high of $123,000 by July. Analysts suggest Harvard's shift reflects a search for assets that can store value amid a rapidly expanding global money supply and pro-crypto policies from the Trump administration. While ETFs like these offer liquidity and easier access than directly holding gold or a cryptocurrency, some experts warn of Bitcoin's speculative nature. Others view it as a calculated risk, aiming for outsized returns despite volatility. For Harvard, this step into Bitcoin and gold signals a willingness to adapt and to bet big on where value might be found next. With both assets riding strong momentum, the endowment's gamble could pay off in a big way. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news all for free. That's all for today's video. Until next time.